Okay. Bodies left above old highs right there. That closing price, as soon as that day closes and a new one opens here, that price right there and anything above it, smart money will start staging shorts. If we're making an all-time high, or if we're making a long-term high or a significant intermediate term high, and we expect to see a decline that's tradable, you want to reference in the market when it's bullish. If you're anticipating a turnaround, you want to indicate every up close price, the closing price. That's what I'm indicating here. So October 2nd, 2025, this price is what's being indicated, which now appears here on this chart. So everything at that price and above, smart money is looking for PD arrays to get short on. They're running out old highs, selling into that. They're selling into that. They're building large portions because they have to act like a commercial trader does in commodities. They enter early. When big positions are sought after, they start putting in positions early. Where do they and how do they do that? Everything above this closing price, anything above that price is going to be chased by what? Retail. But when they're buying it, smart money is selling to them as they buy. So at this point here and above to this candlestick here, all this is where smart money is accumulating swing trading perspective, like a duration of time, not a day trade. In other words, they're staging in that range shorts. And then we get this day, we have a higher close price than the previous one. See that? So now above that price and higher up to here, smart money is looking for PD arrays, old highs to sell into when it goes above it, or trading back up into premium arrays. They're selling short inside that area. And then finally, we have this closing price here. So we have 1, 2, 3 stages of smart money shorting. They're staging their short positions. As the market's going higher, they're feeding that buy liquidity to the people that want to chase price higher. They keep, oh, it's going to keep going higher. You can see what they're doing with the candlestick wicks. See that? Yeah, we were here at this highest point here, but we closed down here. Yeah, we were high up here, but we closed right here. We were high up here, but we closed way down here. We are high here, but we closed right there. That's distribution of longs and accumulation of shorts by smart money. Now, this is not a one-time video and you understand it. Please, young men, do not go out there and pretend that you understand what I just said. It's going to take you a little bit of time studying your own charts and studying what price action is doing when it does these types of things. But do not think like this only with all-time highs. Every time the market creates intermediate term or long-term highs, it does these same things. It does these same things. But all-time highs, you want to see an all-time high form and then a deep retracement and then it gets taken out. And then start looking for these types of scenarios. Okay. So here we have this portion here at this candlestick's closing price and anything above it, they're going to be utilizing premium arrays and selling short of old highs because they have deep pockets, because they are essentially agents of the market where they're literally privy to certain things. They don't have to have the same concerns that you have to have. You want to trade big positions, very, very small stop losses. They don't need to worry about that type of stuff because they're not over leveraging. They're scaling in, they're scaling in, they're scaling in. Now, time element. It's Friday. We're at all-time highs on Thursday. We open up on Friday. We trade up into that Thursday high and we grade that. Okay. Upper quadrant's pierced, but we can't get to the high of it. And we trade lower. As it starts to trade lower, everybody's talking about the comment that Trump made about the 100% tariff on China. And that news is the justification. It's the excuse. It's the news moved the market. Trump's moving the market. Trump is not moving the market. I promise you, this guy is looked at as some kind of messiah. He ain't. The bottom line is this: it is not what he says, it's what the market's doing before he speaks. And then all the excuse, all the blame, well, that's the reason why that retail can see it. And that helps them sleep at night knowing that their trend lines didn't work, or their moving average crossovers didn't work anymore, or their divergences or the indicators didn't